Traders, welcome to another live trading session. We're looking at S&P 500 E-mini futures and we're looking at the time frame 2000 tick charts. Now as a price action trader, I'm solely relying on the candlestick formations as they're printing on the chart. Price action is a language that is speaking to me and I want to read the language and I want to follow the price action correctly. For that reason, I'm drawing my key entry points on the chart. I'm drawing these trend lines because I want to follow the trend line correctly. If I'm using a price action patterns, I want to identify what the high probability setup is going to be. And the high probability setup in price action, it sounds simple, but it is a second entry, two-legged pullback at the key entry point. On our way up, market created a multiple second entry longs that created in a quick, easy scalp. There was a new high form right here, and there was a first entry long, second entry long. Market continued pushing higher. New high here, first entry long, second entry long, and created in a scalp. New high here, first entry long, second entry long, and it created a profitable trade. So this is the high probability setup with the direction of a trend that I'm going to be focusing. Now, before your every trading session, you need to make sure you are aware of which news are taking place, because the last thing you want to do is to be trading right during the news that are happening, and you don't want to be caught in this volatility spike. So what you're going to do, you're going to go to the Google, you're going to type Forex Factory News, and you're going to go to Calendar Forex Factory. And this is how I every single day check what are the news being present. Now, as I go and I scroll a little bit lower and lower, I can see that this is Wednesday, March 16, and I'm paying attention to the red high impact news. I can see that there is a today FOMC announcement, which is the biggest news announcement, which a lot of times completely affects the market. So that means that once I'm approaching the time of these news, I'm staying on the sidelines and I'm not taking any trades. You really don't want to be taking entries 30 minutes before FOMC. You really shouldn't be trading even an hour before FOMC, just for you to be really safe, because what can happen is market will go into consolidation without any clear direction, and you may take a second entry, but it may fail because there's just no momentum and nobody is trading. Everybody is waiting for the FOMC results. So this is how you're going to check the news, and this is what I'm doing. So today FOMC announcement, and it can be slow prior to this. Quickly resuming the video, as of right now we are trading range structure. We can see there's a move up, move down, move up, and the EMA is getting flat. EMA was pointing up the entire time, but right now exponential moving average is starting to get flat and price is swinging up and down, up and down. So right now I'm playing this as a trading range. I'm drawing my shortened trend lines, and right now we are pushing higher and we have a failed breakout above this resistance, but there is a still bullish bias in this overall market. So for that reason, I'm not going to pick a top unless I see a decent bearish push below exponential moving average. All right, we have a new high, first entry long, second entry long failure, which is a tempting trade. I wanted to take failed second entry long, but had it form right below EMA and right as a part of this downtrend. Once we have a break and a new low for this downtrend and we have a two-legged pullback down, first leg, pullback, second leg, entering a failed second entry long so close to the resistance is not really what I'm looking for here. I need a little bit more room for price to go down to this resistance, and we are right close to this resistance, and we may just bounce off of this trend line soon. All right, guys, so uptrend wasn't confirmed and the trading range is the bigger pattern, but you guys can see the price eventually broke lower. But I couldn't really take this failed second entry long because it already created its two separate legs. You guys can see price consolidated, EMA got in the middle of these bars, and this is really no clear direction. So there was really no entry since the market opened. And this is typical for FOMC announcement day. A lot of traders are sitting on their hands before the news come out so they can start trading. So right now, I'm just slowly sitting here patiently without any setup. But that's what you have to do if you don't see any clear high probability setup, because I'm just interested in high probability setups. I don't want to gamble, so right now I'm just sitting here patiently. Price strongly pushed above exponential moving average, which is indicating to me bullish momentum. If this is going to be a healthy trading range, failed breakout above the trading range needs to generate strong momentum to push price all the way down to the support. But we can see that we came shy and we made it to the midline. We can draw a midline like this and we bounce from the midline. We traded up into this trading range, so there's a little bit of a bullish bias overall. So since I see such a strong push above exponential moving average and we cannot make it all the way down here, now this is indicating to me that I'm looking for a failed second entry short right now, because I want to see price to continue pushing higher and continue in this bearish imbalance. Little checkup, I'm still sitting here without any single entry. We have an overshoot of a spike and a channel pattern. The clear bias is a bullish bias. We still keep making a series of higher highs, higher lows, but every single time you push higher, you're at the turning point of at the top of the channel. So I cannot really go long at these highs right here, and especially if we have what looks like to be overshoot. There's really no clean bigger pattern that will help me to identify the structure. So right now I'm just sitting here patiently. We are at the very highs, and you guys can see you want to keep buying at the bottom. You really don't want to be buying at the top, because this is where the price will eventually turn. This is move up, price turn down, and this is where you buy. Move up, price turn down, this is where you buy. Price move up, and it's turning down. So I really cannot go long here. There's no a good high probability setup yet. There was a nice good higher low on a 2500 tick chart that had really great signal bar, and this felt second entry long was quite decent, but other than that I really haven't seen any clean high probability entry so far. There was a downtrend working lower followed by a break and new extreme form. So this tells me that the bearish correction is over. Price is approaching the bottom trend line, and this is the key entry point, and this is a bullish structure. Price created a new low of this entire move down and created the first entry short, pullback, second entry short. But I'm not looking to go short, because the downtrend had to break a new extreme and the overall pattern is up. If anything, I'm looking for failed second entry short that's going to trap everybody going short in uptrend way too low. But there was a failed second entry short, but take a look what happened. It ended up as a doji bar and it closed below EMA. This is not a safe and good entry I can take, unfortunately. So I cannot take this entry. I wanted to take a nice failed second entry short above EMA, but if it doesn't form above EMA, I cannot take this. Alright guys, quickly resuming the video, as we have a very strong momentum of the trend line that I drew. I'm gonna put my limit order at the close. The signal bar is fairly big, but I see a bounce off the key entry point, and I see a second entry long at the bottom. We pushed above exponential moving average. So I'm going to go and move my stop loss one tick below this bar. I'm going to go for 10 ticks. I really don't like how big this signal bar is, but you guys can see if I zoom out like this, 1, 2, 3, 4 confirmation of the key entry point. Let's see if we can make a scalp here. I'm actually going for 2.5 points. Second entry long, bounce off the key entry point, downtrend played out. Even if I draw the downtrend a little bit wider, it had a break and 2 legs to a new extreme. Come on, and we got out. Perfect. So finally a decent trade. First trade for the day, second entry long at the bottom, and this is how you have to trade. This is why the trading is so counterintuitive, because every time you see market pushing lower, you want to sell directly into lows, and every time you see market pushing higher, your common sense is telling you, take a look at the structure like it's pushing higher, let me buy directly into these highs. And the same thing, market is reversing lower, you want to sell here, market is pushing higher, you want to sell here, and once the market is pushing lower, it is tempting to sell. But in trading, you have to trade against what the common sense is telling you. This is the key entry point, and this is why we rely on the price action tools that we use, because this will help you beat the common sense. And when a second entry long forms in an uptrend spike and a channel pattern, and we manage to push above EMA, this is a high probability setup, and you're buying the pullbacks, you're buying the deep pullbacks. You never want to buy at the highs, you want to buy at the lows. So this failed second entry short didn't really happen because the wider pattern was probably in play. But this second entry long managed to create scalp, and our runner got instantly stopped. You guys can see what a strong volatility spike we are having right now. I'm not going to go long now because I really don't like the strong bearish momentum. All right, we have a failed second entry short forming, but I'm not taking this trade because by this time we are really right now consolidating. EMA got completely flat, and for me to take a failed second entry short, I kind of want to see more of a momentum. In this instance right now, we are in a small trading range, and I don't want to go long just yet. This was a strong big bearish rejection of micro double top, and right now I'm treating it as a trading range. So I can't go long here just yet, even though the bias still remains overall bullish, and we bounce off the trend line here. This was a nice bounce, but after such a big 2 bearish bar move down, I cannot go long here just yet. This was a scary bearish momentum. But if I make it a second entry long right here, I still think I would be interested because exponential moving average on a 5-minute chart keeps holding price. So we'll see if we can get a second entry long here that would show some decent momentum. Market created a 2-legged pullback, but I'm not taking this 2-legged pullback because right now we've been in this trading range for such a long time that if anything, I'm expecting for price to pull back into trading range, and I was preparing to take a failed second entry long, but it never managed to close all the way down below exponential moving average. So for that reason, I really don't like this second entry long because there's no bullish momentum in this market. We had an overshoot, price push lower, and this is the place where the price is supposed to strongly rally up higher. but we kept pushing higher, and there was never push above this resistance. Now we pushed above higher. By this time you're already stuck in this trading range, and I really don't like taking this long. If anything, this was a great long trap for short, but it was still above the EMA. I would have really preferred for price to show bearish momentum and push strongly below EMA on one go. Alright guys, quickly resuming the video, as I'm going to take a failed second entry long that took a little bit of time, but it quickly pushed lower, and I want to see if I can get filled on this trade. So I'm going to put my stop loss one tick above this bar. I'm going to go for 8 ticks. I'm going to move my runner all the way down to these lows, and I'm looking at the setup. There was a new high, first entry long, second entry long, and I explain why I'm not looking to take this long right here, because it is a trap. You're going long directly in this consolidation structure, and there's really no bullish momentum whatsoever. And once we have a nice bearish bar and there was additional higher low that trapped even more people probably going long on the engulfing entry, this is where I want to go short on a failed second entry long entry. All right guys, and we are one tick away from getting our target profit. Come on, couple more ticks. We're bouncing off my exit order, but we need to tick through, and we finally got our scalp. So this was a variation of a failed second entry long, but slightly different, because technically it triggered right here, but I cannot go long above the EMA right here. I need to wait for price to confirm the bearish momentum. So this was a little bit advanced entry, a little bit experience based, but hopefully you guys understand why I didn't take a long here and waited for trap. All right, we're very close to getting our runner stopped, and since this is a very tight trading range, I wanted to play it safe, and I forgot to take a full scalp, because my rule is when the price is this tight in this small of a consolidation, you're better off just to take the full scalp, because price will most likely not give you a good runner. I was just so taken back by how slow this market was that I didn't manage to tweak my risk to reward and my ATM strategy. But when you see, this is typical for FOMC or holidays during Christmas, when you're stuck in these trading ranges, you just scalp full, don't even hold runner. It's not worth it. I completely forgot about it, but I was supposed to scalp full here. All right, I'm gonna call it a wrap. 2 trades for the day. FOMC is going to be announced in 1 hour, and generally market slows down a lot, so I'm not going to be taking any trades during this hour. And after FOMC it gets really volatile. There can be a couple of good trades after FOMC announcement, but I'm more than happy just to take my 2 trades and don't push it after FOMC, because if the volatility is really quick, the stop loss can increase and you can get back all the profit you made during today. So I hope the video was helpful. It's obviously really hard to be trading these FOMC days because they're just so slow and so consolidated that there are really no good setups. So all you have to do is just have to wait patiently. And honestly, it is the best thing just to take a day off if you see such a consolidating market like this, because it's just not worth to get chopped into pieces in a tight trading range. It was just typical in FOMC. So if you made it to the very end of the video, like the video, subscribe to the channel if you haven't, and I'm gonna see you guys in the next one. Take care, everybody.